In the previous week, S&P 500 gained approx 4.2%, and this 4.2% gain has changed the technicals on the weekly chart as well as on the daily charts. And as such, this 4.2% gain was not possible without an extreme and absolute manipulation. The S&P 500 and the Dow Jones, these indices were in the technical condition to get a bullish retrace. However, this bullish retrace was not supposed to be 4.2% or anything more than 2.5%. The question is that why we were expecting this, the bullish retrace in the S&P 500 and in the entire US stock market, and was it 100% confirmed? Then yes, it was 100% confirmed that there will be a good bullish retrace in the entire US stock market, because in the previous week, means the last to last week, the indices hit the absolute saturation, K equal to D equal to 0, the stochastic RSI, and this is something that we have seen after 2008, after 16-17 years. But why the S&P 500 lost on Monday? What was the reason? The reason was the profit booking condition. This condition was seen, this was the first update, but based on the closing on Monday on 30th of March, we were expecting a bullish retrace on Tuesday, including the open equal to low condition. Open equal to low condition means immediately after open it will move up. This is why on Monday on 30th of March in the final update I have mentioned these the conditions that because of the absolute saturation, it opens a possibility of the bullish retrace and also the open equal to low condition. Now everything was going well on Monday and even on Tuesday. Then what changed the movement and why I am saying that it was absolutely 100% manipulated even when this was supposed to happen? This was because the open price was higher than expected. Secondly, within the first hour, within first 30 minutes, S&P 500 moved up and made an intraday high in the 645X, whereas the S&P 500 was not supposed to move and sustain above the 642X strong resistance level. This is why in the first update I mentioned that as per the technicals and the conditions, a movement above 642X level is technically not sustainable and it will come down, it will fall back to the 642X. By the mid of the day, S&P 500 was following the technicals, was moving as per the expectations. Then came a very heavy sudden the push in the bullish direction. Now comes the most interesting part, and this is something that will define the movement, bullish and bearish movement in the next week. This part is actually these two candles formed on Wednesday 1st of April and Thursday on 2nd of April. What is so special about these two candles? Both of these candles, we can see S&P 500 entered into the 6,600 range, closed below the 6,600. The S&P 500 failed because technically and logically S&P 500 was not sustainable above 658X zone. Then exactly the same was seen on 2nd of April. It entered into the 6,600 range, failed, rejected, closed below the 6,600. But even with that, the extreme manipulation, the S&P 500 was not in a position, not in a condition to sustain above the 6,600 psychological mark. Okay. However, yes, it has curved. It has restricted the bearish side to the 653X zone. So what we can see here is that after 19th of March 2026, S&P 500 has not given any daily closing above the 6,600. Rather, there were two consecutive rejections, just like what we have seen on 23rd of March and on 25th of March. It made the lower high fall, or any kind of saturation that was there. Technically, it is now clear. Now there is more than enough room in the bearish side. Now, what are the chances that the S&P 500 will be able to trade and sustain within the 6,600 range? Or if on Monday itself, it will simply come down and will form and will follow its bearish cycle? What will be the expected high and the expected low? What will be the triggers, the bearish and the bullish triggers? All of that, including the correction and the manipulation, I am going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of April 6th, means from April 6th, which is Monday, to April 10th, that will be Friday. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in three parts. The first part is the technical part. I will show you the weekly and the daily charts, the technicals, the movement, means the short term and the long term picture, the trend. Second part is the oil, manipulation and the inflation. And through the data and the historical movement, I will show you that why we are still expecting a fall and the correction and not the recovery in the stock market in the second part. Third part is the probable movement. In the probable movement section, I will discuss the bullish bearish conditions, what will trigger the bullishness, what level, what zone, to what level it will be able to move up in the bull side, or when it comes down, then what will trigger more fall, what will be the profit booking conditions, all of that in the third part, that is the probable movement. So guys, first I am going to start with the technical part. But before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the first part of the agenda, and this is the technical part. In the technical part, I will cover the weekly and the daily chart. Weekly chart means the long-term picture, okay, long-term trend. Daily chart means the short-term picture, short-term trend. So this is the weekly chart. Okay, first I'll cover the weekly chart. Weekly chart means one candle represents 1 week. Okay, not 1 day or 1 hour. One candle means 1 week. Let's first analyze the candle. If you notice this candle, the closing of this candle is above the previous low and the previous open, means this is the previous candle that was for the week of 23rd of March. The closing is above the open and closing of both of these the candles. What does this indicate? This indicates bullishness. Bullishness in a manner that on Monday, there will be an initial or intraday bullish movement. There is no confirmation on the gap up open. There will be an initial or intraday bullish movement on Monday through this the candle. That's it. Now this is the chart of the Dow Jones. Okay, so Dow Jones will further confirm if this is happening, then yes. If you look into the Dow Jones, then the candle of the Dow Jones is again a very heavy bullish candle indicating bullishness, and because the closing is above the open and the low of the previous candle, this means that on Monday there will be an initial or intraday bullish movement, not just on Monday, okay, but through both of these chart in the next week, for the entire week, the week of 6th of March, 6th of April, okay, we will see some bullishness. Means whenever there will be any possibility, we will see that bullishness, even though the stock market was heavily manipulated, okay, but because of that heavy manipulation, the stock market has come into the condition wherein there is some scope for the bullishness. This scope for the bullishness does not confirm, does not indicate that everything is good, everything is well, and now there will be a new bullish rally. No. Okay, this I will clear in the next section when I will show you the oil, okay, and the other factors which are clearly indicating and confirming a lower high and then the heavy fall into the correction cycle. Okay, so now this is clear that on Monday there will be an initial or intraday bullish movement, and not just on Monday, but this will be applicable for the entire week. Okay, whenever there will be any chances, any possibility, okay, to go bullish, then the market, the stock market, the S&P 500, Dow Jones, these indices will go bullish. Now let's talk about the technicals. In terms of the technicals, now one of the biggest thing that has happened in my previous S&P 500 weekly technical analysis, I mentioned that we need greater than, means more than 4% movement, more than 4% bullish movement to disallow the crossover in the moving averages, the bearish crossover. Okay, what we have seen 4.2% bullish movement. Because of this heavy 4.2% bullish movement, we are not seeing a confirmed bearish crossover in the moving averages. However, in the next week, it is almost confirmed that there will be a bearish crossover in the moving averages on the weekly chart. Why? Okay, because only if in the next week there comes more than 3.5%, more than 3.5% bullish movement, just like this one, means if the extreme manipulation continues. So there was extreme manipulation, it moved up, but in the next week, okay, the situation is turning bad. And I'm not saying the Middle East or something. I'm simply talking about the oil. This further indicates that even if for any reason like extreme manipulation, the S&P 500 pushed up, okay, then also intra-week there will be a fall. Okay, whatever bullish movement there will be, it will not be sustainable and it will be limited. In terms of the technicals, what we can see here is that S&P 500 is bearish through the moving averages, is bearish through the Bollinger Bands, and is bullish through the Ichimoku cloud on the weekly chart. And the S&P 500 is heavily bearish through the MACD on the weekly chart and is a little limited bullish through the stochastic RSI. Okay, but it's still in the bearish side. Okay, no saturation. S&P 500 is completely out of the saturation. Okay, and the same is in the Dow Jones and the Nasdaq. Right. This means that the S&P 500 on the weekly chart, okay, it is 70%, 65 to 70% bearish. Now let's analyze the chart of the Dow Jones. Almost the same situation. Okay, the same condition, the same thing. Okay, but in the Dow Jones, okay, one of this the good thing is means what differentiate the Dow Jones is if you look into the weekly candle of the week 23rd of March. In the S&P 500, you will notice, okay, this is the 50% of this candle. The open price was here. It moved up, failed, closed below the 50%. Fine. Okay, this is the heavy bearish candle for the S&P 500. But if you notice for the Dow Jones, okay, this is the 50% of the candle. It opened below the 50%, moved up, tried to sustain, failed, and closed below the 50%. Open and closing of the Dow Jones were below the 50% of the candle itself, indicating bearishness. Okay, the bullishness was there because of the heavy saturation, and then that was further supported by the manipulation. Otherwise, the bullishness was expected but limited. This means that even though we can see that S&P 500 is trying to come out of the saturation, it can not the saturation, but through in this the correction cycle, it cannot because of the Dow Jones. Now, in terms of the technicals, the Dow Jones is almost exactly the same as of the S&P 500. Dow Jones is bearish through the moving averages and the Bollinger Bands on the weekly chart and is bullish through the Ichimoku cloud on the weekly chart. And the Dow Jones is heavily bearish through the MACD on the weekly chart and is limited bullish. Okay, still in the bearish side on the through the stochastic RSI. Also, there is no saturation. Okay, this means that the Dow Jones is also 70% bearish on the weekly chart. Furthermore, this green candle of the S&P 500 and the Dow Jones, this is a blessing in disguise. As I've repeated in the previous S&P 500 technical analysis also, whatever green candle or whatever bullishness you will see, this will be seen as or considered as a blessing in disguise. For whom? For the bears. Okay, why? Because this is going to create a lower high. Okay, when it creates a lower high, means opportunity to sell and will realign, will follow and will complete its correction cycle. Now, how soon we can see this, the bearish crossover in the moving averages? Okay, and how soon the technicals will change? For that, let's move on to the daily chart. We will get more confirmation through this, the lower level chart, means the daily charts. Now guys, this is the daily chart. Daily chart means one candle represents one day. Okay, not 1 week or 1 hour. So we will get more confirmation, the short term picture through this, the daily chart. Okay, but guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. Now on the daily chart, let's first discuss the candle. Now, if you notice this, the last candle formed on Thursday, 2nd of April, a good bullish candle, a green candle. Okay, it is indicating an initial or intraday bullish movement on Monday. However, there is a problem in this, the candle. Okay, but before that, this is the candle of the Dow Jones, the last daily candle of the Dow Jones formed on 2nd of April. Okay, very good, very heavy intraday bullish to it traced, indicating an initial or intraday bullish movement on Monday. So both of these, the candles are indicating initial or intraday bullish movement on Monday. Now, what is the problem with the candles? Well, there are two problems. The first problem is the moving average. This is the moving average. Okay, what we have seen here is that Since 19th of March. 19th of March 2026 was the last day when we have seen S&P 500 closed above the 6,600 psychological mark. Other than that, it also closed above this, the moving average, right? Since then, we have not seen any closing above the moving average. You can clearly see that in the picture. We have not seen any daily closing above this moving average. Okay, rather we have seen that on 23rd of March, it moved up, tried to sustain above the moving average, failed and closed below the moving average. On 24th of March, tried, failed, rejected, closed below. On 25th of March, tried, failed, closed below, rejected. On 1st of April, on 2nd of April, exactly the same condition, the same situation. Okay, whenever there was the rejection, then what we have seen, okay, what the data says, what the historical movement says, when there was a rejection on this day, on 23rd of March, then we have seen a gap down open the next day, right? When there was a rejection on this day, on 25th of March, then we have again seen a gap down open and the bearish movement. When there was the rejection on 1st of April, then we have seen a gap down open, okay, and then the fall. Now we are seeing two consecutive rejections from this, the moving average, okay. So there is a pattern, and this is through the moving average. Now if there would have been only the moving average, then there would have been, some chances that it can sustain. Now comes the second problem. Second problem is the 6,600 psychological mark. Exactly the same day, okay, the same thing. 23rd of March, 25th of March, 1st of April, and the 2nd of April. On these 4 days, on these 4 occasions, we have seen S&P 500 moved up beyond 6,600, failed, came down, okay, and closed below the 6,600 mark. Again, failure, gap down, okay, bearish movement. Failure, gap down, bearish movement. Failure, gap down, okay, though it sustained because of the manipulation, otherwise it was impossible to sustain, okay. That is why I'm saying that even though we are expecting an initial or intraday bullish movement on Monday, but how that can happen? Okay, so most likely if the pattern is repeated, then what will happen? On Monday, we will first see a gap down open. Okay, then after gap down open, it may come down initially, or it will be in a condition to move up. Means intraday, it will be in a condition to move up. Now it can move up either immediately after open, means within the first hour, or in the second half. Okay, but it will be in a condition to move up. Why? Because the weekly chart are indicating initial intraday bullish movement and the daily charts are indicating initial or intraday bullish movement. Now let's talk about the technical indicators. Technically, S&P 500 is bearish through the Bollinger Bands, moving averages, Ichimoku cloud on the daily chart. And technically, the S&P 500 is, you can see, a bullish crossover in the MACD. So now technically MACD is S&P 500 is bullish through the MACD and is bullish through the stochastic RSI. In this manner, both of these indices are 70% bearish on the daily chart and also 70% bearish on the weekly chart. This means, and it clears and confirms, that the correction cycle is still there. There is no change in the correction cycle, in the bearish cycle. Whatever bullishness we are seeing here, it is giving us an opportunity to go bearish. It is creating a lower high. And because of this heavy bearishness, we are not just expecting a correction, okay, but it has also opened a possibility for the recession. Why? Okay, the same data. Okay, the data means the interest rate and the oil. And I am going to cover this oil and data in the next section. Okay. But guys, before that, let me tell you, whatever is going to happen or whatever will happen, I will keep you posted. I will keep you updated through these daily precise updates, which I give to my Patreon community members every day from Monday through Friday. Monday, Tuesday, Wednesday, Thursday, Friday. And guys, it's not just about these the daily precise updates, which I give to my Patreon community members every day from Monday through Friday, but I also give the opportunities in the premium stocks of the US stock market, top 30, 40 companies. And guys, that's not all, because I also give this the midweek update, and it's a video technical analysis given every Wednesday to my Patreon community members, and I discuss all of the bullish bearish condition with the exact levels, zones in this the midweek update, the video technical analysis. So guys, whenever you want to join my Patreon community in order to get all of these the daily precise updates, the opportunities in the premium stocks, and the midweek update, video technical analysis, then I have given the link in the description of the video and also in the comment section. And guys, when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will find this button which says membership options. And when you click on this button that says membership options, then you will see these three levels or these three tiers: level 1, level 2 and level 3. Level 1 is the S&P 500 updates, the daily basis, the daily precise movement and the midweek update videos. Level 2 is the S&P 500 updates and the opportunities. Means every day the precise updates and the movement and the midweek update videos, and also the premium opportunities 30 to 50 in these the stocks, premium stocks of the US stock market. Level 3 is a premium level, and here you will get all midweek update videos, daily S&P 500 updates and movement and the premium opportunities, and also through a Zoom video meeting I will teach you, I will tell you the strategy with very high accuracy, one premium hack with high accuracy, one premium indicator, technical indicator in detail with very high accuracy. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire market every day from Monday through Friday, and they are very well aware of what is happening and what is going to happen next. Other than that, the opportunities in the premium stocks, and in this manner they have something to trade almost every day. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the second part of the agenda of this S&P 500 weekly technical analysis. And here I will discuss the oil and the expected Fed's fund rate, the inflation, okay, and the movement of the stock market based on these the conditions, and also the chances of correction and the recession. Okay, now this is the chart of oil, okay, Brent oil. Okay, you can see here US dollar Brent crude oil. Now if you notice, the most important part here, the oil on Thursday, okay, it gained 9%, almost 9% within one day. Now what happens when the oil gains, okay, such a like not just 9%, but even if the oil gains 2% or 3%, okay, within a day, or 4%, then what happens to the stock market? In that case, we see heavy red candles, heavy selling in the stock market. But what we have seen on Thursday, when oil gained 9% intraday, then what we have seen on Thursday? A green candle, a bullish candle. This means, and this clears and confirms a manipulation, okay, a pure manipulation. Because a heavy bullish push in the oil triggers a heavy fear, okay, and a possibility that there will be no rate cuts in the near term. Rather, inflation will move up. Because the inflation will move up, then this will force the Feds to raise the rates or to keep the rates, okay, where these are. Now that was through the charts, but now there was the news that the countries, okay, they're buying the crude oil at $141 per barrel, okay, $141 per barrel. And what is the current rate? Okay, what was the this ticker says? It says 109. Okay, they are buying, the countries and the companies are buying at 141, much higher than the 109. Okay, and this is for the delivery in May and June. This means that even the countries, okay, they are expecting that the crude price is going to increase further. That is why they are securing the oil at the lowest price, okay, or the lowest price possible. This means that the $141 per barrel is expected to be the low price, and Brent oil is expected to move beyond $141. And now the analysts have started to talk about the $200 per barrel. Okay, historically the world has never seen the $200 per barrel. The worst case scenario was in the 2008 financial crisis when the crude hit $148 or $147 per barrel. That was in the 2008, and since then it has not hit the 147 or 148. But that was the countries who were securing at $141, okay, per barrel. However, okay, in the near term means within the April, we are in the month of April. Within April, okay, now they are expecting, analysts and everyone is expecting, okay, that crude will hit and sustain not just hit, will sustain at the $120 per barrel. Now, how this is going to impact the decision of the Feds, the Federal Reserve? Because the Wall Street, the stock market, the global stock market react to the oil, but this is not the only thing that they react to. They also react to what the Feds are going to decide. So here is the scenario. Okay, once again, last week also I have discussed the condition for the 9th of December 2026. Okay, we are now in the month of April. Okay, 9 months to go, almost 9 months to go. Now, for the month of for the month of December, 9th of December, okay, we can see that the current Fed's fund rate is 350-375. Okay, now we are seeing that it is down to almost 70%. Last week, it was approx 74 or 73% or somewhere around. Okay, so the Wall Street was expecting that Feds will keep the rates as is. There will be no rate cut. Okay. But now the major change is in the rate hike. This is 375-400, means now the market participants are expecting 25 basis point of rate hike rather than rate cut. Means no rate cut, not even the pause, but a rate hike of 25 BPS. Okay, last time in the last week, okay, this was not 10%, this was like 1% or 2% hardly. But now it has significantly increased to 10%. This means for the entire year, no rate cut, rather there is a heavy possibility of a rate hike. Now, if there will be a rate hike, then how it is going to impact the movement of the stock market? So for that, you need to understand this bullish rally you are seeing here. This heavy bullish rally from the 5,000 to the 7,000 range. This was based on these two assumptions. First, there will be a rate cut. Okay, number one, there will be a rate cut. Number two, there will not be any rate hike. These were the two assumptions, because whatever the global markets have considered, and there was very heavy unidirectional bullish movement. Now that is not happening. That is why there will be the fall. Because there will be the fall, this means the correction cycle is still there and even the recession cycle is expected. But if the recession strikes, okay, then we are seeing that this year and the almost 2027, the entire 2027 year, okay, will be covered, okay, will be marked as the year of recession. By the quarter 4, okay, the last 2 months or 3 months of 2027, we will see the recovery in the stock market. Okay, so for 15 to 18 months, we will see the recession. But guys, you need not to worry about whether there is a correction or the recession or the economy is good or bad. Okay, you just need to know how the stock market works and not to lose money in the stock market. Okay, rather to be in the winning side. So for that, I have the S&P 500 knowledge transfer program. Through this program, I cover all of the basics, the advanced, all of the technical indicators in detail, trading strategies, market analysis, options trading, options basics, options advanced, options calculator, everything about the options, support and resistance levels, price prediction, and the trend analysis, and how to avoid falling into the traps of the market manipulators and the hacks with very high accuracy. So guys, whenever you want to participate in the program, the S&P 500 knowledge transfer program, then this is my email address. And also I've shared the link to this Google spreadsheet in the description of the video and also in the comment section. So whenever you want to participate in this program, or if you have any questions related to this program, then you can simply send me an email. And also guys, if you want to learn the specific topics like short-term hacks, etc., then this is my Patreon page and this is my Patreon profile. And here you will see the shop section. Okay, when you open the shop section, then you will see that there are these 3 products, product 1, 2, and 3. This is where you will get 8 hacks with high accuracy and the modified technicals. This is the 4 stock market hacks. This is the options and the options trading strategies. The premium calculator means everything about options. And when you participate in these programs, then in 2 to 3 sessions, you will be able to learn the hacks, technicals, options, trading strategies, and the premium calculator. So if you want to opt for these products, then I have given the link to the shop section in the description of the video and also in the comment section. Now guys, I am going to discuss the third point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement. Probable movement means what is expected to happen in the S&P 500, Dow Jones, Nasdaq, and in a manner to the entire US stock market. In the next week, the week of April 6th, means from April 6th, which is Monday, to April 10th, that will be Friday. Now, the first thing first, the economic data. Okay, before that, the earnings. Well, in the next week, no significant earnings. Means the earnings are there, but the giants are not going to release the earnings in the next week. Okay, then comes the data. Well, yes, next week will be full of data. It will start from Wednesday. Okay, Wednesday afternoon we will get the FOMC minutes of the meetings. This will clear and this will confirm, okay, what the Feds were thinking, and if there is any possibility that Feds will not go for a rate hike, rather they will keep the rates as is. Then comes Thursday. Thursday, 9th of April. Now what will happen on Thursday? The PCE data. Okay, PCE and the core PCE data, inflation data. This data is the delayed data for the month of February, not for the month of March. Okay, this means that even if this data indicates some good thing for the Wall Street, okay, then this was before the war started. But if this data indicates bearishness or bad, this means that the situation after the war has further, okay, and it has turned bearish. Then comes Friday. On Friday, the inflation data, the CPI data will be released. Okay, in this manner, the stock market will remain heavily volatile from Wednesday itself. Okay, this also means that the S&P 500 and the entire US stock market has defied the oil. On Thursday, 2nd of April, S&P 500 closed green when the oil gained more than 9% within a day. Now comes the problem. Again, the same problem that I have discussed in the first part also. Okay, in the daily chart section. The problem was the moving average. Okay, we have not seen daily closings since 19th of March above the moving average. Secondly, we have not seen the daily closings above the 6600 psychological mark. Okay, since 19th of March. And exactly the same goes for the Dow Jones. Dow Jones has not seen these closings since 18th of March. Okay, so we are seeing this, the heavy struggle, try to move up, rejected. The same case, rejection, and rejection. Again and again, because of these rejections. Okay, now what does this, the rejection and this indicates? This indicates that on Monday there should come a gap down open. Okay, candles are indicating an initial or intraday bullish movement. Well, that is one thing. Okay, it is not indicating a gap up. It is indicating an initial or intraday bullish movement. Okay, but because of the rejections in the S&P 500, rejections in the Dow Jones, we are now expecting a gap down open on Monday. Okay, however, at the same time, we are expecting an initial or intraday bullish movement on Monday. This means this kind of situation. Okay, there was a gap down open. It came down initially, then heavily manipulated and it moved up. Okay, similarly, we can see a gap down open. After open, technically it should come down. Technically, it has no room in the bull side. It should come down and it should trade bearish, something like this and this. And secondly, now there is no saturation. Because there is no saturation, this means that the back-to-back heavy fall is allowed for continuously for 3 or 4 days of fall is allowed without hitting any kind of saturation. Okay, but still after the gap down open, if it moves up, if it is again manipulated, okay, or irrespective of anything. Okay, what I'm saying here is the irrespective of anything, if S&P 500 goes green, if Dow Jones goes green, okay, especially the S&P 500, then what will happen? And this will be first seen in the Nasdaq. Okay, what will happen? On the daily chart, S&P 500 is expected to hit the initial saturation K equal to 100. Okay, saturation means this indicates the overbought condition. Why why we are seeing so early this kind of condition? Because of the heavy manipulation on March on 31st of March. Okay, when we have seen this, the bullish movement. Once again, the bullish movement was allowed. Even open equal to low condition was allowed. Technically, this was the condition. Why? Because of absolute saturation in the bearish side on Monday on 30th of March. Okay, that is why in the final update I mentioned there are conditions for For open equal to low, okay, this kind of condition that can be seen immediately after open, irrespective of open, whether there comes a gap down, okay, or the gap up, okay, or irrespective of any open, it will move up, right? So technically there was the bullish movement. It was heavily supported. Even the open equal to low condition was supported on Tuesday, and we have seen the open equal to low condition after a heavy gap up open. But what was not there in the picture, once again, a movement, heavy movement above or beyond 642x first, or in the best to best case, okay, 646x. Because of this heaviness, the K equal to 100, the saturation in the bull side is expected just after these the three candles, right? Now if the S&P 500 does not hit the K equal to 100 on Monday, okay, rather it somehow it closes as bullish on Monday, a green candle of Monday of any kind, then on Tuesday it will hit the saturation. Okay, now what is so special about this saturation, that earlier we have seen many cases that when the S&P 500 was trading bullish, it hit the K equal to 0, it even hit the K equal to D equal to 0, K equal to D equal to 100, means absolute overbought condition, but still it was there for 1 to 2 days and before it came down. Okay, but we must understand that time the trend was bullish, trend was absolute bullish. When there was absolute bullish trend, this kind of heavy saturation was allowed, right? But as of now, okay, in the current situation is that the trend has changed. Okay, not absolutely, trend has not changed absolutely, but the trend has changed to the level where we have seen a bearish side of absolute saturation that we have not seen since the financial crisis, since the recession of 2008. Means the trend is bearish. In this bearish trend, if it hits the overbought condition, then immediately there will be the selling. Okay, the market participants will not wait for a long thing like for 2 days or for the K equal to D equal to 100 and to sustain. No, they will not wait for that, because the situation is not good. Okay, especially the oil is not good. Okay, countries are buying at a premium of 141 when the Brent is actually at 109. But in the bearish trend, in the bearish cycle, saturation or absolute saturation or the overbought condition or absolute overbought condition are not allowed, are not permitted, right? That is why highly likely as soon as it hits the 100, we will see a fall. This fall will be seen most likely intraday. Okay, now this further supports the point that if on Monday, let's say there is a gap down open, S&P 500 try to move up, it goes green beyond 6,600. Okay, we have seen the rejection and it hits the K equal to 100. This means intraday there will be a, okay, this kind of fall. We will see intraday fall, a long wick that will be there. If it does not hit K equal to 100, then on Tuesday, okay, it will hit K equal to 100 if it try to move up. This means that the bullish side movement is allowed, permitted, but to the 6,600 or a little into the 6,600 means 661x, my heavy resistance level. Okay, again and again we have seen the failure. In the best to best case scenario is 6,600, 6x or 7x. Okay, the level is there, right? However, a movement above 6,600 is technically not sustainable. Okay, not permitted. That is why the stock market still needs some manipulation to move and to sustain above the 6,600 even on the hourly charts. Okay, without manipulation, it is technically not sustainable in this condition, right? This means that even if it try to move up, then 6,661x is the level that is already there, very heavy level, failure. Okay, maximum if the S&P 500 is pushed heavily up, just like heavy manipulation in last 2-3 days, then 6,600, 6x or 7x is the heavy level and the bullish side will stop. Why? Because when the stock market moves up, then the oil will also move up. Because why the oil will move up? Okay, because the oil has formed and the oil has created a pattern. This pattern is allowing more bullish side movement. Okay, the only challenge here is to clear the $110 mark. That's it. That's it. Okay. Once there comes a 100, once there comes a closing or a sustained movement above the $110 mark in the oil, this means it is heading to the $120 per barrel. And when that is happening in the oil, then stock market, not just the S&P 500 or the US stock market, but the global stock market, they can't move up and they can't sustain, but they will be forced, because now there is a confirmed bullish trap. Okay, the retail participants are, they have already bought. Okay, and if they push, if the manipulator push the S&P 500 further for 1 or 2 days, then there will be more bullish participation thinking that it will move up, but it will not move up. It will eventually, it will come down. Why it will come down? Because it will hit the K equal to 100, the overbought condition. And a overbought condition in the bearish trend is not allowed, or is seen as an opportunity to sell. Right? This means that Monday and Tuesday will be heavily decisive. Right? Now, what if there comes no bullish movement, rather we see the fall? If there comes the fall, in that case, we will have to wait for 4 to 5 days before we can see a movement again back to this, the moving average and the 6,600 level. Okay, and not before that, because when it comes down, then there will be selling and selling. Then S&P 500 is in a very comfortable condition to enter into the 6,200 range without any problem, without hitting any kind of saturation in the bearish side. So first it will come down. Now, yes, the bearish movement, very important here. Okay, there is this important thing, but guys, before that, so far, if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market every day from Monday through Friday, as well as the opportunities in the premium stocks, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So this important thing about the bearish side movement is the open of this candle. That was 6395.88. Okay, the open of this candle formed on 31st of March. Why? Multiple reasons. Okay, primary reason is the manipulation, right? So when the S&P 500 comes down, then and it comes down near to the 6395.88, then initially it will show the hesitation, or even it can show the reversal intraday bullish retrace. Why? Because a breach of this price, what price? 6395.88 means more fall, heavy fall into the 6200 range. Okay, that is why this price in the bearish side is very important, very important here. Okay, whenever there will be a fall. Now this is not just limited to the movement on Monday, Tuesday. I'm saying any day, whether it any hour, any day, whenever there will be a bearish movement. Okay, Monday, Tuesday, Wednesday, Thursday, Friday, whenever there will be a bearish movement and it will be coming down, S&P 500 will be coming down to the 6395.88. Initially it will hesitate, and if it fails to defend the 6395.88, there comes a closing below 6395.88. Okay, forget about the closing. A breach, just a breach of 6395.88, then we will see fall. Means the next day we will see a heavy gap down open and the fall. But as long as S&P 500 is defending 6395.88, there is no breach of this, the mark 6395.88, there will not be any fall, any bearish movement. No, nothing. Whatever bearish movement will be there, it will be limited, will remain within the 6400 range. Okay. Now, so what happens when it comes down, when the S&P 500 comes down and breaches the 6395.88? Okay, it will come down. When it comes down, then it will find means breaching this means that it is coming down to the 6300 psychological mark, because the 6300 psychological mark is there. Okay, initially it will show the hesitation, okay. However, in the 6300 range, okay, there is a heavy support level in the 6345 4x, 6304x, there is a heavy support level, okay, or a zone created by this, okay. That is why even after the breach it will find support. Then there is a heavy support level in the 6303x, and also this creates a zone including the 6302x, okay. So when it comes down, then it will find very heavy support at this the cushion. This will act as the cushion, okay, will hold the fall, okay. We need closing, we need daily closing below this the zone. Only when there comes a daily closing below the zone, there will be the fall. Otherwise there will not be any kind of fall. Even if there comes intraday fall into the 6200 range, it will be recovered, okay. Once there comes a closing below this the zone, comfortably S&P 500 will enter into the 6200 range, and the heavy support in the 6200 range comes in the 6204x, okay. Well, there is a zone around the 6204x. This is where the S&P 500 will find the support. Now question is there any possibility that S&P 500 can hit the 6100 range in the next week, in the coming week? Yes, perfect. There is definitely, okay, there are chances, because if you calculate from the last closing price, then 6200, 6100, around 6% fall, okay. Well, 6% fall within a week, yes, possible. But we should also consider the factors Wednesday, Thursday, Friday, okay. Wednesday FOMC, Thursday PCE, core PCE, Friday CPI, core CPI, okay. Now if all of these three, if not these three, then PCE, core PCE and the CPI, means the inflation data. If inflation data goes against the stock market, the Wall Street, and the manipulators are pushing the S&P 500 and the entire US stock market on Monday and Tuesday and Wednesday or so, and it even hit the K equal to 0 on 2 consecutive days, K equal to 100 on 2 consecutive days, okay. But then comes the data. This data is against the stock market, Wall Street. Then what will happen? A very heavy fall in just 1 or 2 days. What if the data is supporting the bullish movement? But in that condition, we must understand, if the manipulators are still pushing the S&P 500 up bullish, then comes the data, economic data, in favor of the Wall Street. This means that now there is no more bullish side movement, allowed. Rather, there will be the fall. This means that irrespective of the outcome of the data, there will be the fall if the S&P 500 and the US stock market is pushed up. Why? Because in that case, it will be seen as that they have already priced in. They have already priced in all of the best case scenarios, that the war has ended on March 31st, okay, or April 1st, and the oil is below $100 per barrel, and the inflation data will be in the control. All of these scenarios are unrealistic and untrue, because we know that the war has not ended. Oil is trading well above $100. Okay, inflation, we do not know what that will be, but still, based on these things, the same data, the same economic data will give some relief to the stock market if the S&P 500, Dow Jones are already trading bearish on Monday, Tuesday, and Wednesday, and then comes the data in favor of the Wall Street. Then there will be a bullish movement. If the data goes against the market, then there will be the fall. Okay, so this case is different. Means when there is already the fall, data goes against the stock market, against the Wall Street, then the fall will continue. But if it goes in favor of the Wall Street, then there will be the bullishness. The only exception here is the comments from the president. Okay. Now we know that almost every day we are getting something, some news from the president, okay, on the war, and most of the time these comments are positive, because president is trying to cool down the energy market and is trying to give some relief to the energy market and the stock market, because he is already under pressure. That is why we are seeing he is making the comments which he should not. 1 to 2 weeks we have seen that now the energy markets are not considering the comments from the president. Okay, now the energy markets, mean the oil and everything, oil and gas, these are holding and trading bullish. Even when the president comments war will be over, then also they are neglecting the comments from the president. However, surprisingly, at the same time, the Wall Street, the stock markets are considering the comments of the president and are going bullish. But now technically and logically it is clear. When the S&P 500 moves up, then 6,601x, okay, this will be the resistance. Beyond this, okay, 6,606x is the level, actually a zone around this the level that will restrict the bullish movement, right? Furthermore, we need more than 3.5% bullish movement in the coming week so that the moving averages on the weekly chart, which are going to give a confirmed bearish crossover, may not give the bearish crossover, and the bearish crossover may be delayed, okay, by one more week, right? More than 3.5%. 3.5% from the current level means 6,700 or even 6,800. Now, based on the current factors, economic factors, especially the oil and the future prices, okay, the bearish cycle, I do not know how it will be possible. And also in the absence of the earnings, okay, earnings season will start from next to next week, okay, means when the giants, earnings season has already started, but I'm talking about the giants, when the giants will post the earnings. There is no such support to the stock market. The only support we are expecting from the data. However, this data, one more thing that I forgot to mention here, this data, okay, the CPI data, PCE data, this is not going to work because the Wall Street itself is expecting that by December 2026, there will be the pause, means the current rate, the interest rate will remain as is, or there will be at least 25 basis point of rate hike. This means that even if the economic data comes in favor of the stock market, then also stock market, the Wall Street itself is predicting a rate hike, okay, or a pause, then it should not deviate, it should not go against its own predictions and against the oil. But because now we have seen that continuously for 3 days there was extreme heavy manipulation, this manipulation may continue. Okay, however, we will see if this continues and bullish side there comes more movement, we will wait for the K to hit 100. Once it hits 100, then in the bearish cycle, this is not allowed, not permitted. We will see intraday fall. Okay, we will see then the fall and the resumption of the bearish cycle. It will form the lower high. In the bearish side, we have 6,200 comfortably without hitting any kind of saturation. If the situation goes worse, okay, in that case, a fall into the 6,100 is fairly possible, not a problem at all. So whatever is happening or whatever will happen, whether the situation improves or deteriorates, I will keep you posted. I will keep you updated through these, the daily precise updates, which I give to my Patreon community members every day from Monday through Friday. So if you also want to join my Patreon community, then I've given the link in the description of the video and also in the comment section. So guys, hit like if you have liked this video in order to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And also, if you want to ask any questions, then you can ask your question through the comment section.